Hi folks, this is Lee with the Market Sense. This is for the week of January 21st, 2020. I can't say 2020 without hearing Barbara Walters' voice. The charts in this presentation are provided to us by Gettess, come from the Trade Navigator software. And this is our vaunted weekly bond market chart. There's just so much sideways on this chart. You could make the case that they've been sideways since last August. They've certainly been sideways for the last 3 months. And that's kind of got to be the overriding analysis we have here. Now, we can certainly look at potential resistance right near 159, just below it really, and support around 156. Let's just use those round numbers, 59 and 56. That is support and resistance, but they're getting to the point where they've been sideways so long, you have to assume something's going to break. Now, I'm not saying I wouldn't trade against that support and resistance, but I'd be willing to take quick profits, and I wouldn't give them a lot of room because they could start going pretty fast. I think until they go above, let's call it up here, let's say above 161, and down here maybe below 154, that's probably too conservative, but go with me. Below 154, above 161, until they do that, I don't think you're going to see a major move of any kind come. And you've got a distinct possibility that they'll make an attempt at either the top or bottom of this range, and they poke through it. This happens a lot. You get false breaks. They poke through and they're unsuccessful, and they turn back and try the other side. Very difficult to pick a direction here. The most likelihood is that they go to the upside and test these highs and fail and then turn down, but that's just a probability. It's not really, they could just break right down from here. They could roll over all this sideways, be just building up for a big break. That's possible too. But I'm not really that excited about support and resistance. We'll just look to pick against them if they seem to stall in those areas, but otherwise we're really looking for a move to get started. And all you can do is jump on if they break out above the highs or below the lows. And until then, well, they're really not going anywhere. Quite the opposite here in the stock market. This is the S&P E-mini, and last week just ridiculously strong, closed above everything, which we've seen that quite often here. And that leaves them with support down here, it's roughly 32.93, let's say. They haven't even been close to that so far this week, may not get close to that. We're also looking at resistance as they approach the 33.50 area, and I really shouldn't call it resistance. I just want to call it a target because I have no intention of selling against it. It's actually just below 33.50 is the target, but they're kind of in the middle of nowhere right now. They've been going up for so long, they're certainly due to turn down, no question about that. But come on, can you look at this chart and not tell that the trend's up? I mean, I'm not going to be the guy who sells into this. They're going to have to break first, and then I'll see if there's a way we can get short. But they're going to have to break first. This is too strong to argue with. It's a good way to lose money to sell new all-time highs in the stock market. At this point, 20 or 32.93 would be a wonderful chance to buy. I don't know if we're going to get that. And, could they break all the way down to 31.50 from there? Yeah, they could. That's how strong this market's been going up. So no guarantees, but bottom line, don't sell it. Whatever you do, don't sell it. And, we'll see if we get some sort of surprise from the impeachment hearings that jolts them. I really doubt that. I think it's preordained what they're going to do, but you never know. Somebody might shoot their mouth off. Again, just don't sell. It's the best advice I can give you. So that's all we've got for you today. Thanks for checking in to see how we're looking.